we are going to deliver truly endogenous Bitcoin yield where your Bitcoin is actually earning more Bitcoin organically. And some of it come from the financialization of Bitcoin itself, where we know Bitcoin's a very volatile asset, which means we know the options market's very rich. And so if you're able to do some structured trading around it, there are yields to monetize based on that feature. But like I've hinted earlier, Bitcoin itself is part of a larger network, and running the network in itself is the long-term mission of what all Bitcoiners want to see its success rooted in, which is to essentially generate more fees in the network beyond just the mining for additional blocks. And I think in that sense, there's going to be a lot of opportunities there in the future as Bitcoin does become more mature, in which people will want to see some of these primitives come online into the Bitcoin world that Ethereum and others have led the way, but inevitable for Bitcoin as well as the most pristine asset that we know in crypto.
Owning Bitcoin is powerful, but owning a company designed to grow more Bitcoin might be the ultimate play. Jeff Park, a seasoned investment strategist and crypto analyst, underscores that Bitcoin treasury companies are emerging as a pivotal force in the digital asset ecosystem. With Bitcoin steadying around $115,000 on Friday after a 4% rebound, Park explains that the core mission of these companies is not merely to hold Bitcoin as a reserve but to leverage it as a unit of account to create long-term value. The ultimate goal, he notes, is to acquire and earn more Bitcoin per share as organically as possible. This means engaging in opportunities beyond spot holdings ranging from Bitcoin mining to adjacent innovations like stablecoins and rollup technologies. Park highlights mining in particular as one of the only endogenous ways to generate true Bitcoin-denominated yield, though it typically requires institutional scale. By bridging this gap, treasury companies can give investors access to revenue streams that would otherwise remain out of reach. For him, success depends on assembling purpose-driven teams and maintaining disciplined capital strategies. He differentiates between genuine accretive dilution, raising zero-cost capital through tools like convertible bonds, and destructive dilution via unchecked share issuance. Ultimately, Park envisions Bitcoin treasury companies evolving into purpose-built financial institutions, designed not just to preserve Bitcoin, but to grow it in ways that strengthen the entire network. This is just the warm-up. Crypto's biggest moves haven't even started. Subscribe now and turn on notifications so you're ready when the breakout hits.
Bitcoin treasury company is pretty simple. At the core, it is an operating entity that is leveraging Bitcoin as the unit of account to bring value. I think at the core, that is what a Bitcoin treasury company is. There's many ways you can bring value to the Bitcoin ecosystem, but at the core, I think the idea of having your reserve asset being denominated in Bitcoin, where the goal is to acquire and earn more Bitcoin on a per share basis as organically as possible, is the mission. And it's the mandate for which people want exposure to actively and thoughtfully managed Bitcoin exposure, not just at the spot level, but in the ecosystem of opportunities that are possible in the technology behind it. So when I think about Bitcoin, there's the capital B Bitcoin, but there's also other subgraphs of Bitcoin adjacent stablecoins or zero knowledge rollup opportunities in Bitcoin or Bitcoin mining. All of these things are kind of other operating revenue streams that are associated with Bitcoin that are truly purpose-built Bitcoin native financial institution can actually help navigate a lot of investors to access that historically they haven't been able to. For example, Bitcoin mining is actually the only currently known endogenous way to earn Bitcoin yield, realistically, from what that represents by doing the computational work. But most of us here can't actually access Bitcoin mining revenue directly because it requires scale. So then you may end up buying a Bitcoin miner company out there who is in the business of doing this at an institutional scale. But those companies also have operating level leverage and management discretion as to how they build out those businesses. But it's possible in the future we may have the ability to extract those opportunities more directly to the investor's base, right? That is a kind of a Bitcoin treasury operation that doesn't really mean asset management. It just means operating within the support of the Bitcoin network. So I think all of these things are incredible opportunities for what Bitcoin treasury companies can be doing, besides the proven path that we have seen Saylor expertly lay out through. I think it's such an incredible privilege and a generational opportunity. When I joined Pomp as the CIO of this entity, I made a joke that internally in the asset management world, we think of CIO as the chief investment officer. But if you leave asset management, CIO means chief information officer. That's what most people understand it. It's a technology job. But I said that this might be the one job at last where that I might be interchangeable, because in Bitcoin, the investing is the IT and the technology to which there's gains that are generated within it. And in that sense, to be able to build a team from the bottoms up, day one, where everyone is purpose built and joined for that mission, gives you a ton of degrees of freedom to really invest in the right way. At the end of the day, it's not just like a cultural alignment of ensuring that everyone believes in the Bitcoin mission, but it's bringing on a diverse set of talent that actually can be useful, not for just the moment of now, but where we think the industry is going to go 3 to 5 years from now. And that, I think, has been the most incredible privilege. And I'm really optimistic and hopeful that we've done an incredible job in finding the best operators in the most elite way possible that the world has not yet seen. And all it takes is for us to just widen the aperture a little bit more to see beyond what a Bitcoin treasury company can be than the way that we know it exists today. The very first time accretive dilution was brought to the public dialogue was when the convertible bonds were leveraged to essentially allow a free option for the ability to raise capital for the treasury companies. When you are able to borrow at 0% interest rate, which is what Strategy had been able to do, to then allow the investors, the lenders, to convert into stock at a higher price, that is accretive dilution, because there's no ATMs and it's really allowing a forward pool of capital for 0% cost of capital. I mean, that's pretty amazing. Just hitting the ATM, by definition, is not really accretive if you're increasing the share count by ways that you're actually diluting. So there's a difference here. And the thing that I take to share with everyone is to use the ATM to engage in what people are calling accretive dilution is not a right. That's a privilege. That's the thing you earn by essentially sharing your investors why you deserve to trade at a premium for the exact value of delivering the yield. And only once you've actually been able to deliver that yield do you then have the privilege to hit the ATM to raise more capital. So if your whole foundational story is, oh yeah, there's an arbitrage here and I'm going to just print the ATM to get more stock per share and then I'm going to increase my assets. No. That's a privilege and you have to earn it. And I think the way that we've been thinking about how we're going to do that is we are going to deliver truly endogenous Bitcoin yield where your Bitcoin is actually earning more Bitcoin organically. And some of it come from the financialization of Bitcoin itself, where we know Bitcoin's a very volatile asset, which means we know the options market's very rich. And so if you're able to do some structured trading around it, there are yields to monetize based on that feature. But like I've hinted earlier, Bitcoin itself is part of a larger network. And running the network in itself is the long-term mission of what all Bitcoiners want to see its success rooted in, which is to essentially generate more fees in the network beyond just the mining for additional blocks. And I think in that sense, there's going to be a lot of opportunities there in the future as Bitcoin does become more mature, in which people will want to see some of these primitives come online into the Bitcoin world that Ethereum and others have led the way, but inevitable for Bitcoin as well as the most pristine asset that we know in crypto.
MicroStrategy's $3 billion bet on preferred stock might be the most underrated Bitcoin trade Wall Street refuses to understand. Jeff Park, a seasoned investment strategist, argues that MicroStrategy's preferred stock presents a unique opportunity for investors seeking Bitcoin exposure through financial instruments. He notes that the real tail risk would only emerge if the company were perceived as having credit issues, yet with leverage sitting near 15%, he sees this as unlikely. Assuming no unexpected operational or custodial failures, the preferreds offer double-digit coupon yields, an attractive feature in today's environment. Park highlights that a Federal Reserve rate cut could be a key catalyst. While money market funds still yield around 4.5%, reducing the incentive for investors to shift into higher-risk instruments, a decline in rates toward 2% or even 0 would widen the spread dramatically. This could make MicroStrategy's preferreds with yields to worst near 12% stand out, potentially pushing their prices above par, even toward 120 or 130. MicroStrategy, under Michael Saylor's leadership, has has issued over $3 billion of preferred stock with coupons as high as 11.5%, a strategy that has sparked debate due to its limited cash earnings. Park, however, views the instruments more like undervalued equities trading below fair P/E multiples. If the company can continue generating endogenous Bitcoin yield and adding to its balance sheet, he believes the gap will close naturally. Over time, the market will reward this yield, much like valuing a growth stock, ensuring Bitcoin-backed instruments trade at a premium rather than a discount. Let's get back to the interview.
I think every asset kind of finds itself into some maturity where the end game is you want it to have a permanent capital vehicle in the end that is more broadly accessible. I think that's the journey of every asset. But some assets can reach that status much faster than others. Some can reach it in a more fungible way than others. But there are some that will actually never kind of find that fit either because of the physical materiality of its existence. I joke around people collecting Pokemon cards as a thing that would obviously hold value for certain people and certain class of investors, but it will not probably be financialized in ways where thinking sovereign funds are going to buy Pokemon cards, right? That's never going to happen. Bitcoin treasury companies start buying Pokemon cards. Big announcement, November to come. No, but things about what that shows you is IP is inherently valuable, right? So IP, how do you access IP in a thoughtful way? I think there's ways that we're going to see IP that exists today in private funds where litigation claims and trading are hugely valuable. There are people that raise funds to do these strategies, but hey, these IPs can exist differently in a tokenized format that I think is probably where the most interesting opportunities of tokenization is going to come from. In my opinion, tokenization isn't really about NASDAQ reorientating itself so that we can buy Robinhood stocks more conveniently on chain. I mean, that's interesting and it's important. And we should have more money velocity and clearing mechanisms that bring all of our age-old infrastructure to the next level. But the real tokenization is going to be when the long tail of financial assets that historically hasn't found product market fit for people to access to find a wrapper for which people can now invest in. So, one example that I always share with people is predictions market. You brought it up earlier, is going to be a huge market because I think prediction markets is the antidote of AI, where basically if you as a human have any insight that AI is going to be unable to front run, it'll be because you, the human, are living in the now versus whatever recursive learning that the AI was doing, which by definition is what predictions market is. You're trying to predict events that haven't happened yet. So if you're able to participate and bet on those markets, I guarantee you there are going to be some incredibly great predictions market traders, i.e. fund managers. They may raise money. They may raise money in a different format than a 3C7 hedge fund that we're comfortable with. It might be through a tokenized on-chain fund. And so these are the things where then I was in the radical portfolio. You should put 10% of your capital in somebody who can make great trades on predictions market because that's an uncorrelated return of 8 to 12%, which has nothing to do with the risk-free rate. Nothing. The rate of return on a great predictions market trader has nothing to do with the state of the economy, right? That's truly a resistant radical asset that is productive and income generating. If there was the tail risk of strategy being perceived as having credit issues, then all of these prefers would be problematic. But if you don't believe that, which I don't think any of us does because there's so little leverage on MicroStrategy today, it's something like 15%. And you assume there's no, random operational risk of custodial failures or things like that, then you literally are earning double-digit coupon while you hold on to the paper. So to me, the other catalyst here that I'm excited by is the Fed rate cut. Right now, because money market funds are still yielding so much yield, 4.5%, there's not a lot of incentives for people to leave for something that's only offering 7 to 8%. But eventually, if we believe that 4.5 is going to go back to 2 or back to 0, the gap's going to widen. And it's going to become more obvious that earning double-digit yield is actually a huge spread. And so the biggest beneficiary of a rate cut, of course, Bitcoin will benefit, but I think structurally the biggest beneficiary of a rate cut are probably going to be these preferreds on MicroStrategy. So if you think the yield to worst today on these are 12% and you think it's going to come to 7% or 8%, that principal pool on the duration, which is very high because it's a perpetual instrument, which means it has a lot more duration than most things you own, then these are the kinds of instruments that can actually go above 100. it can go above to like 120, 130. Now, of course, that's why the ATM is there. Saylor can use that ATM to then pull more ability to buy Bitcoin. But from a downside perspective, I think it's fairly risk remote. If it trades at a discount, it is not that different than how people think about PE ratio to stocks trading too cheap to its earnings power at some level, right? And there are ways that you can think that you can fix it. There are ways you can structurally try to engage in some capital market transactions to close the gap. But I think in the end, if you can generate, again, like endogenous yield on the assets for which that is organically closing the gap by bringing more Bitcoin gains on the balance sheet, then as long as you're in control of your own destiny, which is that you don't have liquidation risks and you don't have credit covenants that will otherwise create issues that down the line, then it's a waiting game. Because if you just wait, the ability of assets on asset return will close the gap, even if the stock doesn't do anything. And then I think it's actually cyclical related in its reflexivity to people seeing that will then assign the premium for it, right? It's pretty basic, but if you think about like your traditional DCF models, and you have to think about how to assign that terminal value into perpetuity of any stock, it's based on the fact that there's some growth yield associated with it. So if you just model, hey, here's a Bitcoin that earns 6% into perpetuity, what should I pay for that Bitcoin upfront today? That by definition has to trade at a premium because it's generating yield into perpetuity. So I think if you're able to prove it, to me, it feels like one of those things that it should really never, ever trade at a discount. The same way that stocks don't trade at below PE of like 4 if they think that actually the revenue behind it and the earnings power is long lasting. Right now, MNAV, it feels like a little bit of an arbitrage of a metric for which people are playing these funny games. But the reason is because there hasn't been a showcasing of the ability to earn yield. Once I think you show that in the case of an operating company, it'll feel a lot more like a rich or cheap company based on PE metrics of how much yield you need to justify the premium to pay for it today versus tomorrow.
Bitcoin is rapidly transforming from a reserve asset into the backbone of corporate finance, with treasury companies and yield-bearing instruments signaling the next wave of adoption. The surge is undeniable. Earlier this summer, Animoca Brands reported corporate treasuries jumping an average of 150% within 24 hours of announcing crypto adoption strategies. Markets are starting to reward not just those who hold Bitcoin, but those who find ways to grow it organically through innovative structures like preferred stock and mining-linked yields. As institutional demand accelerates, the opportunities for exponential upside are stacking quickly. The question isn't if this shift takes hold, it's how soon you'll position yourself before it does. If companies are gaining 150% overnight just by embracing Bitcoin, what's stopping you from catching the next move? Bitcoin waits for no one. Stack your voice in the comments, share this with fellow believers, and lock in your subscription with alerts to catch the next wave.